The stock of the day is, drumroll, Rudi, TechnologyOne. So the company today posted a 16% rise to its profit after tax to almost $130 million for FY23. Revenue was up almost 17% to almost $430 million. The company expects margin growth to return in fiscal 24, with margins for the group expected to improve to 35% in the coming years. Annual recurring revenue growth is on track to meet its $500 million ARR target by 2025. TechnologyOne also announced a special dividend of 3 cents per share. Total dividend is at 19.5 cents per share. Let's check in with the share price so far today, down by 2%. So I've got a bit of egg on my face because I thought there would be a more positive reaction to that result. It was 16% ahead of profit guidance. So Rudi, first of all,
to support your view, by the way, it first went up by 2%.
Did it? Okay.
And it has been yo-yoing between negative and positive.
Okay, why? Because was it a quality report in your view?
I think it was anticipated. Yeah. If you follow the stock, I mean, they pulled forward their long-term target from 26 to 25. I mean, I don't think I've seen too many analyst reports that were not expecting that to happen anyway. So that target by 26, I've seen some numbers of 700 million instead of the 500. Gives you an impression of how strong these guys are growing.
Yeah.
It's all about short-term, long-term, of course. Usually, and I see the historical pattern has repeated, usually the share price rallies very hard into the result. People realize, oh, these guys are about to report and it will be a cracking result. And I think today we basically see the confirmation. It has been a cracking result, but people are now looking backwards and go like, oh, we made a lot of profits on this one. Maybe time to take profits. And I think that's the mystery of the share market always. You can come out with a very bad result, share price can rally. You can come out with a cracking result and the share price yo-yoed between positive and negative. And in this case, it's at the moment it's negative.
But you can see that longer term chart, right? So you think that it was just priced for perfection. It was priced, all the good news was sort of priced
No, I don't think so. I think it's very simple. It has rallied very hard. And we underestimate on that chart how much it is, but I think that's easily 15 to 20%, which is a lot in the run up to something that is about to happen. So I think it's just simply profit taking. Maybe those who went into stock have done well. For those who are not in the stock, well, obviously keep your fingers crossed that it pulls back more. This is a company that doubles every 5 years. It's about, from memory, 4 billion something market cap. So in 5 years' time, it'll be 8 billion market cap. Your decision is whether you're on board or not. Value investors will never understand this stock. Lesson number one for investors also is don't ever look at the PE ratio in isolation. But on the other end, probably the best quote stock we have on the share market, and that says a lot.
Yeah, you said that before,
that says a lot for me.
So the question being today, is a 2% pullback enough to get you to buy TechnologyOne today?
It has run up so hard. But of course, if you own it, you keep it, I think. I bought more shares in the pullback. So I'm smiling anyway when I wake up in the morning. And I think you have to have a longer term view, and the share market does what the share market does. And while some stocks, I mean, I still remember not that long ago when nobody wanted to buy TechnologyOne. It was all the reasons that you can think of. Too expensive, growth is going to slow down. They had some court cases, one with a customer in Queensland, one with an ex-divisional manager. And a few years later, I remember when it was $10, it was expensive. 16 and going.
Okay, so that is a hold from Rudi for one of his favorite companies on the Aussie Stock Exchange.
TNE. Guilty as charged.
Yeah, I'm proud of it. What can you tell us about the quality of the result that came through, what it indicates about its future prospects?
Look, it was solid. I mean, revenue looked to be about a 3% beat ahead of consensus, profit up 16%. I think that was a small beat. Cash conversion, very strong, 116% versus 105% in FY22. They pulled forward their revenue target from FY26 to FY25, where they're targeting annual recurring revenue of 500 mil. And they reiterated they're expecting to double every 5 years, so that's $1 billion in 5 years after that. I think all of this was anticipated, and a month ago we spoke about this very issue about analysts upgrading into the result, and you've seen the share price up about 15% in the last month. I think people are expecting a good result and got it, therefore some profit taking. Last week, a lot of agricultural stocks reported where people were expecting a terrible result. Results were down, but not as bad as first thought. So share prices were up 5 to 20%.
We call that a knee-jerk reaction, don't we?
Knee-jerk reaction. So I think it's about what's priced in by the market. This is still a market darling, I would call it. 39 times PE, FY24 coming into this result, 16% growth. It is not cheap. It will never look cheap. It is a great bottom draw stock. I think everyone anticipated this. We now turn to the next 5 years as we should. Can they beat consensus forecasts? I think the stock goes sideways until we work that out. Stock is a genuine hold. If you've owned it, bottom draw, don't worry about the share price, don't worry about the PE. It always looks expensive, but I would not buy it after today's anticipated result.
And the margin going to 35% means higher profits.
Yeah.
It's really that simple.
Okay. So there you go. There's TNE. That is the stock of the day.